Welcome to your Mortgage Insider Update, December the 8th. We are 2 days away from the Federal Reserve's December rate decision. The bets are on that they will be cutting, but it was just the end of October when they made it really clear that it very could likely not be a cut in December. The jobs reports that have been delayed, the few reports that we have gotten for September for both inflation and jobs, we're showing quite a reduction in the overall health of the economy. It's likely to see a cut this Wednesday, but likely a hawkish cut. So that basically means that just like last time, they cut and then said, don't count on this again. So that's not really helpful for the mortgage rates trade on the outlook. Like, what do we expect to happen in the near term and medium term? So it's likely to be, kind of priced in that there would likely to be few cuts, or at least no cut in January. And between now and the next Fed meeting, there will be the announcement of who the replacement to Fed Chairman Powell will be. So basically, it's going to be kind of volatile this week. It's already starting to see rates push higher ahead of this meeting, whereas in previous meetings, the anticipation was that there was going to be a cut, and we saw interest rates actually trading down. So let's take a look at where we start the week off. So we can see overall Treasury rates are quite a bit higher. Just right at the end of October, we saw this get down to 4% and actually breached just a hair under 4%. So up 18 basis points or 17, just rounded up there, basis points in just a matter of weeks. Just this last week, we'll see in a second where the rates have definitely moved higher. The mortgage-backed security market, the trading that they're selling, basically investors don't want to buy the mortgage-backed securities, so we see the interest rate going up. We can see a pretty steady move just since the 1st of December, and I guess it was 4% just the very end of November, right before the Thanksgiving holiday. We saw a nice little move lower, kind of coming to the end of Thanksgiving. An interesting move higher on the Treasury market on December 1st. This is actually the day that the Federal Reserve had just announced at their last meeting that they're going to stop the runoff of their balance sheet. So there should be more buyers in the Treasury market because if a Treasury bond expires, so if they bought a 10-year Treasury bond at the Federal Reserve 10 years ago, which was when they were doing a lot of this quantitative easing, when those come due, they're going to reinvest the money starting December 1st. So it's interesting that since December 1st, we've seen a move higher because you would think the Federal Reserve buying or maintaining their level of investment in Treasury markets in particular, would see an easing of interest rates, but we saw kind of a battle happen last week around the 25-day and 50-day average, which it lost on Friday, moved quite a bit higher. Today, we're already starting off the week quite a bit higher. We know this doesn't move in a straight line. I mean, we've seen this in the past, it moves up and then it steadies and then, it's up and then it's down. And, this Wednesday, it could very easily, reverse course depending on what happens with the Federal Reserve meeting. We will get the summary of economic projections, which is where they basically put all their heads together as 19 Federal Reserve members, and they're going to put out what they think individually, and then that gets charted as one collective, and that's what markets are going to anticipate that the smart folks at the Federal Reserve, this is what they're thinking, and that's what a lot of the market movement will start to take form after this meeting. So we'll keep an eye on it. Hope that the rates can come back down. 10-year Treasury not being exactly like the mortgage rate, but this definitely is a trend in the wrong direction. Take a quick look at mortgage-backed securities just for the inverse look at the actual mortgage bonds that are being traded. So like I said, the rates are going up because the price of the bond is going down. Investors are not wanting to buy them. So that market has been relatively steady. I mean, as we get into the end of November, it was hitting a high point that we had gotten really close to back in October before the Fed announcement. So that pulled prices down and they recovered. This week, today specifically, starting to break below these 25-day and 50-day averages that have been pretty steadily holding rates at their own. So a closing below this today would not be good for the direction of mortgage-backed security, in interest rates in general. But this is the week of the Federal Reserve, so all bets are off. We'll come back next week and give you an update and see how it really looks. So don't hold your breath this week. Just pay attention. help your clients if they're out looking at homes to just, work through the noise and find the home that's right for them. It is the holiday season, so have a wonderful holiday week and get all your shopping done early. Take care.